Good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 25th of November. We've only got 3 or 4 more of these we're going to do for the year. Today is obviously one of the favorite weeks. In fact, why would I say today is one of my favorite weeks in the market? Just out of curiosity, why would today be one of my favorite weeks in the stock market? Because the stock market's up. True. And that's along the same lines, but there's more to it than that, Jeff. Why would today be one of my favorite weeks? There we go. Thanksgiving optimism. And I could put that in general. Optimism with low volume and usually is a bullish week. I don't have to do anything. POTUS didn't tweet. That's a good one, Ida. That is really good. Yeah, I mean, in all honesty, it's an easy week for me. And that's all relative, right? It's an easy week in the stock market. I have flipped my sleeping schedule. And in all honesty, I'm at a hospital from about 7:30, 8 o'clock at night till 9:30 every morning. Out here helping my father-in-law, a great guy, fighting bladder cancer, and I get the opportunity to stay up all night, make sure he's taken care of. So with that said, if we take a quick look at the market recap, from last week. Last week, the S&P 500 fell 0.03, which is awesome because Hurley Investments basically gave it away. I'm sorry, I should have had this ready for me ahead of time. Hurley Investments. Doing a little bit of adding here. Plus 962 minus. Hurley Investments was up 0.71. So I'll be honest with you, I loved last week. I'm ecstatic. The S&P fell 0.3 and we were up 0.71. So that's really a 1% difference. If I can hold those 1% differences, every week, I'd beat the market by 52%. So obviously I'm not going to do that every week, but I love having a down week and being up. That makes my everything, so to speak. That just makes my job easy would be the best way to say. A little worrisome last week. Consumer staples fell 0.1%. Not something that you want to see before Christmas. You actually want to see consumer staples, consumer confidence, personal income, personal spending up, but we didn't. Real estate lost 1.1%. Technology, industrials both fell 0.8%. I mean, it was a widespread drop for the most part. Healthcare was up 0.8%. Financials, utilities. Good to see financials looking great into a Christmas rally. But with all of that said, what is going on with Target? In fact, I'll be honest with you, I'm a little frustrated. I've got sell orders in on target now at 127.25. And again, I know someone's going to say, oh, they're just coming off of an overbought. I get it. It was a big jump. But for crying out loud, I feel like I've missed the sell up at 127.50 3 damn days in a row. And it bothers me. It bothers me because I want that extra $2.50. It should, in all honesty, it should keep going higher. And it has a track record of being overbought for a week, for crying out loud. A comment was made, is it their real estate? Is it their earnings? So I don't think it's either their earnings or their real estate. They had great earnings here recently. And, you know, running into the Christmas season when they're going to make all their money, this is the time when they should have a pretty good run. So I do have a sell order on the stock at 127.25. We get a little bounce higher tomorrow. I'm going to try to take a quick profit and be out of that particular stock. Extended hours, target's up another 12 cents. So I guess we shall see. If you have a minute, the short answer is I'm not going to be doing much this week. I do think we have pretty low volumes. If I take a peek at the Dow, nice up day. It actually looks pretty decent volume. I would expected lower volume. The S&P, pretty decent volume. NASDAQ, pretty decent volume. I would be telling you we'd have lower volume than we should. If I was to look at some of the core holdings, shocked. Apple just keeps going higher. It's been overbought for a month. And that sucker is going to head up to 280. If you happen to do that trade finding spread, the 265, 280, maybe it was a different one. Maybe. There's a 265, 270, 255, 275 is one I think that we had got in. You might be looking to take your profits. Definitely I'd be looking to take some profits off of 255, 275. This looks a new one, 265, 270 looks like it's a new one. And the 250, 265, I also would be looking to take those profits. So you will see me most likely be putting a sell order in for those here in the near future, just to not get too greedy and just book some money. In fact, what I seem to really like Apple, Baidu, Disney, Visa, Facebook, Bank of America. Core holdings. Really nice to see all of your core holdings killing it. Now, little troublesome. If we have less money, our core holdings are still Bank of America, which is nice to see. Ford is in there, which is nice to see. But then we have Under Armour. Under Armour is a core holding. It's a technology / retail. Kevin, it's not really technology. It is definitely bothersome for me to see Under Armour as a car holding down on a day like today. That does give me pause, especially going into this this time of year. So if we're here, let's just take a quick peek at some of our core holdings so that we have an idea of where some of this may go to, right? Apple, kind of feel like we're on the high side already. Baidu, we have a little more upside to that 127 range. Really, it should go up to 135, but we do need some type of Chinese deal to help Baidu keep moving higher. Disney, about time, finally back up to that 150-ish level. Need to watch it. If we see a drop down, might be a good time for a covered call. Closed on the high side today, but what worries me about Disney is the spread between the 50-day and the 200. It is too wide. It is too wide, and you're going to see some other algorithms and so forth work on Disney, and it probably is going to be pulled back just a little bit. Obviously, it shouldn't. Frozen, and the quickest animated billion-dollar movie. Those guys are just like a freaking ATM. They are doing so well with their movies. It's absolutely shocking and unbelievable. Go Disney. I can't believe Disney's doing as well as they are. It's absolutely amazing. But I guess it doesn't shock me. So let me say that again. I know I just contradicted myself. Disney should have been moving up this whole time. I'm shocked that it's coming all right now because they've been a good company for 2 years. Their $6 billion movie, Star Wars will be their 7th. They are crushing, like doubling the all-time record of movie producers and how much money is being sold from them. They're literally doubling the record that was out there. Of course, they have bought like 4 movie studios, right? So it's kind of like 4 movie studios doubling the record this year of money for movies produced by a studio. But pretty darn amazing. I would really like to see Disney up at around 165 by the end of the year, but most likely, again, because of that wide spread, you'll see it come down. Just frustrating. Ford, for crying out loud, Ford, get moving. Ford versus Ferrari, great movie. Right closed on the dollar, peg the $9. We do have $9.10 at the 200 day. If it can get above that, you will most likely see it go up to $9.80 to $10. Bank of America, just touching that overbought again. I would like to see it fully valued at 35, but it's taking its sweet old time getting there. What else is some of my other ones that I had here that I wanted to go over? Visa Facebook. Shocked Visa's not at 200 plus. Caught in a range, but definitely ready for a next run up. If you look at the pivot points, its newest upside opportunity is going to sit at 187.15. That's where I'd expect Visa to be in the very near term. I would like to tell you by the end of the year it should be closer to 200, but really Visa 187.50, $7 to the upside, $6 and $6.50 to the upside here in the near future. And hey, Facebook back over 200. Almost couldn't hold it. But it was back above 200 today. It looks like 202.13. It should be trading up at 200, and if it can hold 200 for a couple days, 228 back to the upside. It could be a very quick $28 as they just rip higher based on advertising and sales for December. So should be a great day, should be a good end of the year for us. And again, if you look at all of our charts, we're bullish all the way across the board. If you ask me where we're going to end this week, I'm going to say higher understanding. We're going to have just retail money in the stock market. Please be advised, Friday is not a day to trade. Friday is going to have such light volume. Will most likely be higher. So Friday will be a day just to really book some profit and get out of some things. I'd even tell you don't spend any real time in the market on Friday. Enjoy a 4-day weekend. I still think November will end up 2.25%. If we take a quick peek, 3060 trading at 31.33. So let's just do a quick little calculation again. If I had a 3060 minus 31.33, where we're at right now, 73 divided by 3060, we're up 2.38% month to date. So my 2.25 prediction is pretty accurate. A lot of people ask me, well, Kevin, why don't you trade more? Here you make these predictions. Historically, you're ridiculously close. Why don't you trade more on it? And I'll be honest with you, I don't know. It's rather tough for me to make a guess. And yes, I might be ridiculously accurate, but the months that I'm not accurate, I'm way off. I am way off. So I might hit, 10 months out of the year where I am ridiculously accurate within, less than 0.25%. But the 2 months that I'm off by like 5%. It's like giving it all away after you win it. Earnings, Palo Alto Networks, PVH today. Tuesday is the second week of basically our retail with Abercrombie & Fitch, Best Buy, Burlington, Chico's, Dollar Tree, Dick's. Hopefully Dick's will tank horribly. Teach them not to sell guns and firearms anymore. Dell, GameStop, Guess, Hewlett-Packard, and VMware. Wednesday is Deere. Kind of unique to have it just sitting by itself, because if you look at Wednesday's earnings, they really, everything comes Wednesday. We have durable goods, personal income, personal spending, pending home sales, GDP. It is going to be a big Wednesday, and it's going to be on light volume, so you could see some big swings in the market. in all honesty, I would expect the swings to go higher. Personal income and personal spending are expected to be at 0.3%, a little higher than expected. Durable goods is expected to be down negative 0.07, with the X transportation being up 0.02. I think that can beat 1.9 GDP. And GDP at 2.1, and we're really off to the races on Wednesday. And it'll all be because there's no volume. So it's just going to be retail money moving the market and swinging it highly. International, nothing that stood out to me this week. How am I looking to trade? I'm letting things run during a shortened week and nothing. In all honesty, I'm just letting things run in a shortened week. And I'm grateful to be able to be out here to help my father-in-law. My sleeping schedule is messed up 10 ways to Sunday, but it is what it is. A couple interesting articles. Gary Cohen, Trump's knows he lose credibility to China if he blinks on tariff deadline. I found it very interesting that China's taking a harder stance. They're trying to appease the U.S. and have some stricter or harder, I guess is the way to say it, a harder punishment for intellectual property theft. Pretty amazing to see. December 15th is that tariff deadline, though. Just keep that in mind. I really don't like Armstrong Economics, but this was forwarded to me. Ida, this is more for you on the repo crisis. Credit to Ida to bringing this to my attention. But if you've heard about the repo crisis, I'm just going to agree with a sentence he made that I like so well. I will do a special report on the repo crisis because it just seems people are using this crisis to sell nonsense and outright bullshit. I'm starting to get a better understanding of what it is and why it's there. And I haven't worried about it, but again, I'm going to give it to Ida to point this out. Someone just asked, why don't I like Armstrong Economics? It comes back to where they've made recommendations in the past, and I don't know if I can wrap my hand around what's his face making all the money that he claims he's made. So I don't know. You just I don't know. I guess where there's smoke, there's fire is my easiest thing to say. And there's been so much smoke around the Armstrong Economics and old what's his face on money that he's traded. Did he do on insider trading? I mean, it just I have a hard time trusting it, is the best way to say it. How do you take the Bridgewater bearish rumors? I didn't. I kind of glossed over it, ADP. And with that said, in all honesty, it was interesting to see the Fed Beige Book today. If you go through the Fed Beige Book, for all intents and purposes, you have received confirmation that the Fed is going to sit pat. That's what's going to happen. The Fed is just going to sit pat, and the Fed Beige Book, how'd they say it? They said that they are strongly committed to a 2% inflation goal. So it was interpreted as they said everything that they're likely going to hold rates steady from where they're at. If anything, they should probably raise them back up. And I'm going to explain why here in just a quick second. Baidu is still undervalued. I spend a lot of time with Seeking Alpha. but I just do a lot to run their numbers. I guess something that's really important when you see stock pickers and when you hear advisories, oh, I really like this. That bugs me. In fact, that pisses me off. I can't believe an advisory would tell someone, I really like this, and leave it at that. You need some numbers behind it. I really like Baidu because it traded up to $288 and there's a huge upside opportunity. I'm liking it more because of their $1 billion buyback program. I really like it because its valuation is so upside down that there's a huge valuation expansion opportunity for Baidu. I love that their revenues have pretty much stayed in place through all the bad news that you've had with China this year. I like that it can go into a trade agreement with the United States, and the Chinese Google can unlock huge profits when their consumer base and their business base starts to use more of their when they feel more comfortable over in China to start expanding, like our businesses here, holding their money close and tight to the vest. Same thing's happening over there. I like that they're in cloud and artificial intelligence. Again, ridiculously cheap. I'm going to give you numbers that justify where Baidu can go versus just telling someone, hey, I like this, I like that. Interesting question, and it was brought to my attention by a couple different people. Is Schwab showing any trading opportunity with the takeover TD Ameritrade? And the answer is no. In fact, Schwab, you can blame Schwab for somewhat ruining their industry. The fact that Schwab cut commissions means they couldn't do it on service and profitability. So they're now gathering their base by being cheap. And in all honesty, my question to people are always, are you looking for a cheap broker or are you looking for a successful broker? And there's a big difference. Schwab trying to take over TD Ameritrade will most likely be its undoing, because the only way that Schwab is making money now is through funds of funds and through interest. It really hasn't done it for profitability. So please, when I tell you that there's all kinds of hidden costs associated with mutual funds or a fund of any kind, please understand that there's going to be even worse mutual fund fees that are hidden in this crap. I don't know why anyone would be in a mutual fund, because really, you're going to get smacked. You're going to get smacked around. You've got to see the industry hide and find a way to produce more fees. A couple of my guys that I really liked at E-Trade were let go. They were let go. They were taken, and people are losing jobs over, all intents and purposes, Schwab being ridiculous. They've shot themselves in their foot being a cheap-ass brokerage firm instead of worrying about quality and real returns. And it's going to affect all the brokerages. You're going to see some good ones leave because they can't afford the cheapness of the U.S. consumer. I've always heard people talk, well, what are the commissions? What are the fees for placing trades? And I'll be honest with you, they were all relatively close, but I never really worried about it. If your fees to place your trades were eating into your profits, you were not in a position to be placing your trades. You shouldn't have been. So that's an interesting question. I will blame Schwab for putting a couple good brokerages out of business, and I will also blame them for them creating the need to hide more fees within funds of some kind, more hidden fees, more small print fees, because they could not compete on a service or on a profitability metric for their clientele. So markets are overbought, but there's not much worry on Wall Street. Really pay attention to this one. Our markets are overbought. I like some of what's up: Visa, MasterCard, Apple. Pretty interesting to see that we're getting complacent again, which means beginning of next year, maybe we'll have another pretty good correction. I would really love to see that at the beginning of the year. I'd like to see things just tank to give us the opportunity to be profitable. Walmart CEO Doug McMillon, pretty amazing. Here's the one I referenced last week. We could go away any minute. Pretty amazing to see a CEO tell you if you're not meeting the wants and needs of the customer, you're done. Obviously, Walmart is a huge player in retail sales. It is our generation's JCPenney, and maybe in a roundabout way is taking a knock at JCPenney or some of the stores that are not moving to online sales. But pretty amazing to see a CEO call it the way it is. Just an article that I enjoyed because I would like to see more CEOs be like McMillon and be willing to think out loud and to share it with individuals, to share it with your guidance analysts, in all honesty. Visa strong tailwinds emerge for some unexpected sources. I agree 100% here. Please feel free to read through this and to see where I've seen profitability for Visa. I really thought it would have been to 200 already, so I'm a little disappointed it's not moving as fast as it should. But if you're in Visa, a great opportunity to see what I see in on growth opportunities. Do read through Janet Yellen says there's a good reason to worry about U.S. economy sliding into recession. It will most likely not be next year, but I did find it interesting that for all intents and purposes, she is not agreeing with the Fed cutting, even though she was by far the most dovish Fed chair that I can remember. So she is criticizing the Fed right now and Powell for doing what she had done, and she created this long-term trend that we're going to have to pay for. She's the one that covered up with what's his face before her, covered up the pain that's involved with a market correction. So she's literally making, or has made, the next correction horrific or worse than 2008. Yet she's trying to cast blame on Powell right now, not having enough ammunition to prevent the downturn that she's created. Pretty ridiculous. Markets may get a boost from a cherry Black Friday consumer sentiment. I won't be out shopping. My wife won't be out shopping, but wow, this looks to be an all-time record amazing Black Friday as people run out and fight the stores and the ridiculousness that's involved with a Black Friday. And that's it. That's all I have for you. Really, this week, I'll do a trade findings and adjustments tomorrow. And we're going to cancel our Thursday one. I do apologize last week. I was stuck in the hospital and didn't make it out in the time that I thought I was going to. I appreciate Keeve covering for me, but I really threw that on him last minute. And that was my fault for having our trade findings being somewhat messed up last week. Again, just trying to take care of a father-in-law and my fault. Thank you, Maud. It was Bernanke. Bernanke and Yellen have created our next market crash by covering up the pain and the correction that needed to be done. It'll most likely be a horrific or an ugly crash. I would not be surprised to see our market fall 66%, kind of agreeing with Rand Paul, and only be down 50 to 45% for the year. A little heads up. Thank you, Maud. I literally will come back home. Haven't seen the family for a couple weeks. We'll come back home on Saturday, this coming Saturday. And then I fly out on Sunday to go do the same thing and be the night shift for my mother and my father. So for the first 2 weeks of December, Mom has a knee surgery and she just doesn't do well with anesthesia and usually will stay in 2 to 3 days. And my dad's fighting his cancer, which will keep him in the hospital for 4 to 5 days. And I am the night shift. I'm the one that gets that duty right now. Excellent question, Ida. What stocks do you watch for the 5G revolution? Well, in all honesty, the 5G revolution is 3 to 5 years at least away from having any impact on the US. And when I'm looking at stocks for the 5G revolution, Sprint and Verizon come to my mind. Sprint because it's with SoftBank and has all the capabilities to completely switch their reliability. Broadcom is the main push, in my opinion, for 5G and for getting all the new cable, fiber optic cable wired in there. But the United States is nowhere close to a 5G revolution. In fact, in all honesty, 5G is going to be used reliably and consistently on your phones. Mark my words, we're at least 10 years, if not 15 to 20 years away from having that capability. And really, the phones will have the capability, but we won't have the wires laid, a fiber optic wire that can push that signal that speed through our cities. Google was working on it, and they've got, what, 12 out of the 48 major metropolitan, or 13 out of the 48 major metropolitans that have some wiring. But please don't think we're going to miss, please don't think you're going to miss anytime soon a 5G revolution with phones. We're nowhere close to capitalizing on that technology in the United States right now. Lee, thank you very much. I appreciate it. It's quite funny. Going through college, I drove 18-wheel trucks, thought I was going to be a LA deputy sheriff and worked the night shifts at the jails for a while before I went on patrol. And it's I guess one of my gifts is being able to switch my sleeping schedule pretty quickly. And if, you know, I love our medical system, but if you don't have someone with you there at nights in the hospital, unfortunately, there is a lot of opportunity for mistakes to happen and to be overlooked. If you have anyone that's in the hospital, coverage to have someone there to be with them makes all the difference, in my opinion, on the type of medical care that they're going to get. All right, guys. Hey, let's see what else. I might have a couple more here. Thank you. I appreciate it, ADP and Ida. Thank you much. So we're going to go through this till December 16th. So I think I've got 3 more. We're going to take a break for a couple weeks, Jeff, Keeve, and I, and we'll get started again at the beginning of the year. That does not mean that you're not welcome to give me a call or to send emails if you got specific questions. But really, it's take a little bit of time to recharge your batteries. And I think we've been given a gift this year with the markets, with our China deal that'll most likely come through, that we're going to be able to sit back and really enjoy a pretty good run into the end of the year. Guys, have a wonderful evening. Again, thank you for understanding where I'm coming from. I'm exhausted. I'm absolutely exhausted. There's nothing like Gangdale Hospital. I watched the market open. I am out in California, which is kind of nice because the market's open from 6:30 in the morning till 1. But pretty nice to see the market open, take care of things on the computer off of my phone. I would not get on a public network for advertising our trading or having that open. Good to have the SEC have some extra programs on my computer that are required for safety and protecting passwords and our money, obviously, that's in the market. And it's just it's a long day when your day starts at 5:30. I guess 4:30 in the afternoon. I wake up, get this done, get there by 7:30. Stay around till 9 in the morning, make sure the market's doing okay, then go to sleep from 10 till 4:30 my time. There's my 6.5 hours of sleep, and I'm good. We're in California. I'm down in Fountain Valley, Huntington Beach area in Orange County. And I'm at the big Cigna Hospital in Irvine, California. Spend 14 hours a day there and make sure my father-in-law gets taken care of. To then turn around, I'll do it at MD Anderson first and second weeks of December out there in Houston, Texas. All right, guys, have a wonderful week. I look forward to seeing some of you tomorrow, trade findings and adjustments, and I'll have this uploaded here shortly. Have a great week, guys. Thank you for your concern and your care. And what an awesome week we had last week in the market. Looking forward to seeing probably 3 or 4 more throughout the end of the year. Take care. Bye-bye.